Yes, today I'm up a little bit over $80,000 day trading. And if you want to learn how I did that step by step, tune in. Let's go. So today was a pretty blessed day, another trading day where price action was very clear and we were able to get a good opportunity and a good trade into place. So coming into the open with my bias, what I was looking at through higher time frame narrative was I was looking through the 4 hour and I was looking at the 1 hour as a potential guide in where price could go. And through higher time frame, what I was able to recognize that price was consistent, and we were seeing price consistently putting in lower highs and new lows, right? Lower highs and lower lows. So from there, kind of building off what New York did yesterday, all I was looking for was continuation of what we did. So we weren't very clear coming into New York Open because we had seen opening the overnight move somewhat be bearish, but it wasn't extremely bearish. However, we did end up seeing the opening range move take out London lows, which ends up, or then we end up seeing price essentially come back up here off an initial move back up. But then you see the high that we put in through New York, and you look at the type of session that we've had, or the highs that we put in for the New York session, and you look at the 15-minute time frame, and this hook high is equivalent to near the CE, the midpoint of this 15-minute gap that we end up tapping into, and also this 5-minute fair value gap, which we came up here and pretty much filled almost fully. So we had a clear area of high that we ended up putting in, and being that I was already bearish coming into the open, being that we had seen higher time frame narrative look bearish consistently, and then we also had seen overnight price trade at a bearish state where you had seen London, the tail end of London, come back down here and trade past its Asia low. I felt as if the New York Open, as long as the opening range move wasn't too bullish, and we had seen price, saying come up here, invalidate these arrays, trade past overnight highs. As long as that didn't happen, I felt price could still have a good chance here of putting in a lower high and end up making a move to where we end up coming back down and kind of disregarding the opening range move. And that's exactly what we did. This is kind of the idea that we had coming into the open with our trade. I said potential higher time frame, overnight price, both pointing downside. If we come back down and mitigate bullish opening range move, downside overweighs upside here. This could be a 5-minute IFEG short that we end up taking. So again, with our three components and identifying bias, we have our higher time frame looking bearish because we have underlying sell side liquidity, and we have the state of price looking very bearish, respecting a 4-hour BPR, bearish BPR, which we had rejected, and also through the hourly seeing, consecutive bullish PD arrays get invalidated. We see price then through overnight end up looking to continue off what we did. The importance here as well, which is why I feel like it's been very easy to kind of read price the past couple of days, is because it's not like you're only seeing one session trade, bearish, and then the overnight sessions trade very bullish. You're seeing price through New York distribute. You're seeing overnight price either consolidate, then eventually look for another distribution and another leg down. So that's what we ended up doing here today. Yet again, and it was simple follow through of what we did yesterday. It was copy and paste, right? New York distributes overnight chops, and then we end up seeing it kind of trade back down coming into the open. Open extends it. New York trades overnight chops. We end up seeing the tail end of overnight kind of extend it, or more so look to trade lower, and we see New York extend it. Yes, the initial move was bullish, it was, but you end up seeing the opening range move here get mitigated by us coming right back down and mitigating this 5-minute gap, which happened to be our entry. Again, the high that we end up putting in, which is important here as well, the lower high that we ended up putting in was a high that we tapped into a 15-minute gap, rebalanced, and also tapped into a 5-minute gap and rebalanced as well. So you then end up seeing price come back down here. In my area of entry, the reason I look to go invert or take entry off this 5-minute gap, go invert, is because it's also enough displacement where it requires you to more so mitigate 1-minute structure, 1-minute higher lows, and also a couple bullish PD arrays before entering this trade. So enough displays here is what I wanted. That way we can know that price is truly looking for reversal back down here as opposed to just retracing. You see the break structure, you eventually see entry on this trade. You see it come into fruition. We come back down here. We then take the trade, and the entry confirmation off this trade ended up being at 9:56 a.m. Eastern Standard Time. You look at the executions that we ended up taking live on stream. We end up taking this trade here, right? And you see our executions panning out. Our take profit one based on this trade was this 4-hour internal wick, right? We go to the 4-hour here. It's an internal wick low, right? Inside wick low, which we had our take profits based off in terms of TP1. And then our take profit two was this hourly external low, which we never ended up hitting. We ended up getting trailed out off our runners here. And this trade ended up realizing for about, I believe, a 1.2R. So another successful, easy compound day. And the great thing with what we do, and we always say this when it comes to the community, is although we're looking to compound right now, we're still going to have days as well where they're home run days naturally, right? With our system, when you end up holding a trade like this, for example, today we end up getting trailed out. But on occasions where price is very bearish or very directional towards one way, once you start seeing price put in consistent steep lower highs, for example, on a short like this, and you don't see price look for those, retracements like we're seeing here, what that's telling me, or what that tells you, is that price most likely looks for further follow through. And when that happens, when you see price get that direction, then you'll see price shoot for more and more. Or so for this week, we traded 4 trading days, and we're green every single day this week, all time stamped, all done live, and we haven't seen a home run hit. But once we do end up seeing price look for that clear follow through, because today, although today we delivered well, we're trading in an inside day so far, right? You look at the 5-minute time frame, you get out of replay mode here, and you look at what price has been doing consistently so far this session. It's been a pretty inside day. We ended up taking liquidity here, but we by far caught the best move of the day, and since then we've just more so been trading inside. But on days where we do end up seeing immense follow through, right, like we have the past couple of days, you'll see price, on trades like these, not look to trail as close, right, or as quick. So that's more so it. That's the beauty of our system. A beautiful trade here. In terms of the stop placement off this trade, it was a swing high. And if you go back and watch yesterday's review, we kind of talk about it and the importance of having a good invalidation point for your trade. And you see the stop loss on this trade be the swing high, kind of similar to yesterday's trade. You never want to prematurely base a stop off the amount of points in the trade. That's not how I trade. That's not how I recommend trading. Always base off price action and structure, and you end up seeing price here, respect almost immediately off the entry. We don't see a retrace. We see price go immediately because this is such a clear setup. But then the evaluation point, the reason I like this stop here is because had we seen price go invert off this 5-minute gap, then come back up and trade above the swing high, that's when I felt price most likely was going to look to shoot for that 15-minute gap fill and potentially overnight highs, therefore having a good invalidation point. But if you have your stop placed off like a 1-minute wick high just because you feel like the points on this trade here in terms of the stop is too wide, like you're really shooting yourself in the foot. You make sure to trade structure and price over anything, right? Keep everything on the charts, in my opinion, and that's how you more so look to succeed the best. So yeah, that's pretty much it. That's the trade review. Very effective day. And with that being said, on to the next one. Peace out.